great to have you on the show. You say 50 basis points is off the table. Why? Because of everything we've seen play out in financials the last 2 days?
Well, the Fed's already downshifted. They went 75 4 times, they went to 50, they went to 25, and then to ramp up to 50, I see is definitely not happening, especially after this week where the ripple effects of SVB on the entire venture capital community should be enough for the Fed to look themselves in the mirror and said, wow, we've done a lot. Maybe we only got a couple of rate hikes left, or at least just take a lay of the land and see how the economy acclimates to this, what I call shock therapy rate of rate increases.
So, Peter, I mean, you and I have had this conversation that there are 3 stages to a bear market, and that when you're entering the 3rd stage, something typically breaks. Are we entering the 3rd stage of a bear market right now?
Well, I still think the second one being the economic consequences of the very sharp rise in interest rates. I think we're still in the middle of that. The 3rd phase will start to be when investors just start throwing in the towel and don't want to own stocks again. So I still think that there's a road ahead before we even get there.
What's the impact of CPI and PPI next week, you think, without the Fed speak?
Well, up until the SVB news, it's clear that the stock market was solely trading on where they thought the Fed would move rates. And the bond market and stock market correlation was pretty tight, as opposed to the stock market trading on 4th quarter earnings over the past month plus. So CPI, PCE, and payrolls are the 3 most important data points that the market's obviously going to focus on. And any hint of further disinflation will be celebrated by the market. But that said, at what point does the stock market start to focus on the recessionary situation that we have building here, and that bad economic news would actually be bad for stocks? And I think maybe this week could be the first sign that we're shifting towards that, with stocks down and interest rates lower.
Is that what you think investors should be focused on?
I do. Well, if stocks over time have any relationship to earnings, then yes. I do think that the market needs to take their attention away from, oh, how many more rate hikes do we have, to understanding that just higher for longer is a rate environment that itself is going to be a continued form of tightening. Earnings recession is going to continue as the quarters progress, and we need to further re-rate this market to take that into account.
Peter, quickly, what's the bond market telling us, given the moves we've seen?
Well, with the curve inversion further deepening, to me, it's clearly saying recession, and more so possibly a hard landing than a soft landing. I mean, just ask the VC community today. There's no soft landing there, and you have the potential of this spreading to other parts of the economy.